Here with this week's hottest stories in the investment world, this is Zach's Friday Finish Line.
Hello, and welcome to the Zach's Friday Finish Line. I'm Ryan McQueeney, a content writer here at Zach's, along with one of our editors, Maddy Johnson.
Hello, today is Friday, July 21st, and we're here to recap this week's biggest stories from the investment and financial world. It's been a pretty long week of earnings as we are finally starting to reach the heart of Q2 earnings season, and we'll be covering this week's top reports for you today.
Yeah, I like to think of it as getting buried in like a swamp. So right now we're knee deep in earnings reports.
Yeah.
Next week we'll be waist deep. And then by the end of July, chest deep,
That's a good,
barely surviving.
That's a good picture.
Before we get into earnings reports, though, and before we actually even get into our first full story, I just wanted to quickly bring something up, like a question. Have you seen this Chipotle story?
Well, you showed it to me.
Yeah, not even the neurovirus story, because that, I mean, is a part of it, but we had rodents falling from the ceiling in the Dallas area restaurant. I don't know if
so foul.
I don't know if that aspect of it is true. To be fair, I don't know if the falling from the ceiling aspect of it is true, and I'm definitely.
I'm just picturing an employee like with a broomstick,
Yeah.
like banging on the ceiling, and then a tile like comes loose, and rodents just
starts raining rats.
raining rats. It's
couple
so
of
gross.
things before we get ourselves in trouble here. They were mice, not rats. So saying rodents, I feel like is even a little bit disingenuous because a mouse, I would say, is about 100 times.
Nuance.
A mouse, I would say, is about 100 times better than a rat. Because you could rats are disgusting and carry the plague. Mice are kind of cute.
Historically, they
cute.
did cause the bubonic plague back in the day. Wiped out millions of people.
So I can confirm that there were actually rodents in this Chipotle, though. There was a video online. It kind of went a little bit viral on Thursday, especially considering the whole earlier in the week food poisoning outbreak. Where was that at?
Yeah, so a Chipotle, this Chipotle, forced to briefly close a Washington, D.C. area store
that was in DC.
Due to an alleged norovirus outbreak.
And
Pretty gross.
Just for the record, norovirus is the scientifically correct way of saying food poisoning, correct? Because
yes.
the more we were talking about this, I just knew food poisoning as you get sick from contaminated food. I didn't know that there was like a neurovirus is the OG
sickness that caused the
issues back in 2015.
Yeah, that was E. coli.
That which is like food poisoning
maximum.
Yeah,
it's just like to
up.
another level. Hashtag lit. So this is not that. It's still pretty bad.
Yeah.
If you've ever had food poisoning, it's not pleasant. Yeah, not a good week for Chipotle. Not a good week for Chipotle stock. Took a huge hit in the wake of both stories.
So yeah, mice falling into your rice at Chipotle. All right, shifting gears from Chipotle's bad week to our first story this week, a good week from a company that doesn't get too many good weeks these days. That is former retail powerhouse Sears. Shares of Sears Holdings opened more than 20% higher on Thursday morning. The stock would eventually come back down a bit throughout the day, but this was a reaction to the news that the struggling retailer announced it would begin selling its Kenmore appliances on Amazon. Sears has been dealing with constantly slumping sales for years now, but the company will now have access to Amazon's massive customer base, actually its second largest potential pool of customers outside its own brick and mortar stores. I should rephrase that. Its largest pool of customers besides its brick and mortar stores.
Okay.
So also part of that announcement was that they're going to be integrating Alexa technology into a new line of smart appliances.
I'm going to interject. Do you watch the show Silicon Valley?
Yes.
Did you watch the latest season?
I don't know if I'm caught up on it, actually.
So there's
no
this
spoilers.
like mini. Okay, I'm going to be vague as possible.
Okay.
There's like this mini plot line with a smart refrigerator that the
yeah.
guys buy for their
Sure.
incubator.
Uh-huh.
This reminds me of all the horrible things that hackers can do with a smart refrigerator. And now Alexa,
Yeah, smart dishwashers.
smart dishwashers,
Yeah.
and
So-
Alexa's soothing voice.
Smart appliances here to stay, obviously. Shares of other appliance sellers, including Best Buy, Home Depot, and Lowe's, slipped on Thursday. And the appliance maker Whirlpool also saw its stock drop a little bit. I will note Whirlpool, they actually do manufacture some products under the Kenmore brand, so they weren't
Interesting.
fully affected by it. Kenmore has been Sears' kind of in-house appliance brand for as long as I can remember. And then those Best Buy, Home Depot, and Lowe's, those other appliance sellers, especially Home Depot and Lowe's, who I believe we've said on this show are kind of Amazon proof because of
their ability to sell appliances and like huge like drywall. I mean,
Yeah.
and wood.
Yeah. So you brought up a good point earlier today when you were talking about this. How is delivery going to work on this?
How is delivery and installation?
Yeah.
Well, here's what I'm imagining it going to be. So hopefully this is going to be part of Prime. Fingers crossed. So let's say you need a new refrigerator.
Let's say yours breaks.
It breaks. You go on Amazon. There's a great Kenmore refrigerator. Assuming Kenmore makes refrigerators. I think so.
Yeah.
so
Definitely
you-
like dishwashers and stuff like that.
So you order one up, gets there in 2 days, and then like with this like whole delivery, then like part of that delivery process, like a Sears representative comes like so like an Amazon person doesn't necessarily deliver it, but a Sears installation guy does.
And that would actually make sense and be relatively consistent with what Sears does already.
So like who gets rid of your old one?
Yeah, one of the I would say few kind of strengths that Sears has displayed through the years is its delivery installation. For a while, they had the iconic like trucks that would come out.
Yeah,
you don't see them very often anymore, but yeah, I mean they still have enough locations where it seems like they could pull that off, and enough expert installers of things.
Oh yeah, there's definitely a need for that, and that's definitely an area that Amazon, while partnering with Sears, has yet to really kill off, if you will.
Yeah. And I should also note as well that the announcement comes just a few days after it was revealed that Sears had received a new line of credit from Eddie Lampert, who is the company's CEO, his hedge fund, ESL Partners. These new loans from ESL are said to have a maturity of 151 days and a fixed interest rate of 9.75% per year. In case you didn't know, Sears has been doing this really interesting thing over the past 3 or 4 years where they just keep writing checks to themselves, basically. Lampert's hedge fund, ESL Partners, as I just mentioned, is been the primary funder and basically the only thing keeping Sears afloat, which is an interesting business model. And I think a lot of people would have some interesting things to say about Eddie Lampert's leadership over the years. But that is neither here nor there. We have Netflix earnings to cover. We previewed it.
And on that note...
Yeah, we previewed it last week, and it happened on Monday afternoon. Maddie, fill us in with the results.
Yeah, so Netflix reported its second quarter results after the bell on Monday. The company posted earnings of 15 cents per share, which lagged behind the Zacks estimate of 16 cents per share. This snapped Netflix's 7-year streak of earnings beats, unfortunately. But nevertheless, Netflix saw revenue figures, including DVD, of $2.79 billion, and just edging past our consensus estimate of $2.76 billion. And this figure grew 32.2% year over year. Operating income came in at $128 million, while operating margin was 4.6% for the quarter. The streaming platform added 5.2 million users during the period, and this is well above Wall Street's estimates of 3.2 million. So looking ahead, Netflix expects earnings of 32 cents per share and net income of $143 million and total revenues of $2.9 $969 billion for the third quarter of fiscal 2017. So despite the rare earnings miss, investors are reacting to the salad subscriber ads here, and Netflix cited its amazing content for this performance, and that's the same content that helped the company rack up more than 90 Emmy nominations, as we heavily discussed last
Yes,
week.
definitely.
So House of Cards, Orange is the New Black, The Crown. That's probably I think The
Yeah, that
Crown
was
is going
a
to do
smash.
really well
That
at the
was a
Emmys this
smash
year.
hit. Yeah, they've had a good year content-wise. It's interesting that the earnings miss, very rare for Netflix, had been very, very consistent over the years, as you noted. And interesting that, of course, we're reacting to the subscriber numbers because they were better than expected.
Like crazy better.
Yeah,
Almost like
to the tune of 2 million-ish.
2
yeah.
million, yeah.
And in kind of ignoring that earnings miss, even though last quarter, when the subscriber numbers were a little bit worse than expected, Netflix's management said, well, let's actually focus on earnings. Let's focus on expanding our international margins, things like that. Margins did expand a little bit in this quarter, too. That wasn't necessarily like a failure, but interesting that we're still not listening, still fixed on the subscriber numbers.
Mm-hmm.
But when you're going to kill estimates by that number,
Yeah.
we're going to be paying attention. I mean, I don't disagree. I think it was just a killer content year for them, especially very recently. So cool things to look at there. I'm going to pivot from Netflix, which I think is one of the more popular companies and brands out there, to a company that has had some difficulties in the popularity department recently, and that is United Airlines.
Mm-hmm.
I'm
I'm going to be flying on United in a few weeks.
Oh, really?
So I'll be
Better hope it's an
a little...
empty flight. Yeah.
I don't think it is. Actually, I looked at my flight information. It looks pretty packed, but so I'll be anxious to see how the flight goes.
Sit in the
It'll
back,
probably
keep
be
your
fine,
head down.
but
yeah. So United, I think most known for the forceful removing of the passenger, also killed a record-sized bunny. Did you hear about that story?
Oh, that giant rabbit?
Yeah, they killed a rabbit on board accidentally. I'm not going to say they killed it. It died in flight, which is sad. But anyway, moving on. It was a decent quarter for United. They released their second quarter results on...
It was a decent quarter business-wise.
Yeah, PR-wise,
not so much.
You can't just kill like the world's second largest rabbit and think you're fine. Anyway, so United released its second quarter report on Tuesday afternoon. Company posted earnings of $2.75 per share. This excluded 9 cents from non-recurring items and beat the Zacks consensus estimate of $2.65 per share. Company saw total revenues of $10 billion. I actually wanted to stop there for a second. This beat our consensus estimate of $9.96 billion just a little bit. Revenues were up 6.4% year over year. But I wanted to stop here for $10 billion because I wanted to just share a tiny tidbit of a fun fact. I would look at a lot of earnings reports. Obviously, we report on just a ton during earnings season. When I say $10 billion, I've actually never seen this happen before on a earnings report as far as the number coming in so even. It was really like on the report $10.00 billion.
Really?
Yeah, it was very flat on it, which I just had never seen such a even number on a report before.
Interesting.
Revenue, our PRASMs, which is passenger revenue per available seat mile.
That's a huge metric for airlines.
The ever important PRASM was up 2.1% in the second quarter. United also said that it now expects third quarter pre-tax margin to fall in the range of 12.5% to 14.5%, and third quarter PRASM to come in somewhere between a 1% slump and a 1% gain in the next upcoming quarter. I wanted to share a quick quote from CEO Oscar Munoz, who, of course, had plenty of things to say back during these PR headaches we talked about before. He said, quote, "From investing in our products and our people, redoubling our focus on the customer experience, closing the margin gap with our peers, and delivering strong returns to our investors, we have made important progress and moved United decisively forward." End quote. And I just want to highlight redoubling our focus on the customer experience because they've certainly had a lot of that to handle as of late.
I will say, like, that whole passenger removal incident, almost like, I mean, it was the leggings incident, it was the bunny incident. But then all these stories started to come forward about just like airline inconsistency with consumer,
nature of
with
the
the
beast.
with consumer experience, excuse me. So United, certainly not the only huge airline needing to step up their consumer experience and how they serve their customers. So this is, I guess it's a good step forward that the CEO is directly
addressing
it in their earnings quote, but also not surprising. I mean, it'd be a little suspicious if they just ignored.
To their credit, I think never tiptoed around it for 1 second. And
certainly they didn't.
Management, quote wise, public statement wise, seemed to try to be tackling it head on. You touched on kind of the nature of the beast with the airline industry. Traveling is one of those things where you don't remember the 99 times it goes right, but the one horrific experience you will remember for the rest of your life.
And so does the internet.
Yeah, and you can't really get past that to a certain extent. But yeah, that's that. I wanted to highlight United after the crazy stretch they've had, still in the news. Going to pivot over to a company that is sure to be making news for the next few days. I don't see this story going away with how big the results were. That was Microsoft's report.
Yeah, so Microsoft, huge earnings beat, earnings of 98 cents. So investors should note that this excludes 15 cents from non-recurring items. This is non-GAAP earnings. This beat the Zacks consensus estimate of 71 cents per share. Non-GAAP revenues came in at $24.7 billion. This was up 19.8% year over year. Also beat the Zacks estimate of $24.188 billion, so getting a little specific. Azure revenue increased 97%. Huge.
Big time.
Year over year. Huge. And then kind of under the cloud umbrella, so Dynamics 365 revenue was up 74%, and then commercial Office 365 revenues was up 43% year over year. So huge numbers there. And then I just want to touch on that LinkedIn contributed $1.1 billion in revenue to Microsoft's productivity and business processes segment. So I guess that was a really good decision on Microsoft's part.
Yeah, well, interesting because they don't end up breaking it down to what the earnings impact that is. You obviously get the revenue impact, but it would be interesting to know a little bit more about how that is going from an earnings perspective. Although you're getting the revenue, and as we said when it happened, you're basically paying for that data too, all that information about all those users. So that's something that is a little bit less hard to calculate, or a little bit more hard to calculate on a earnings report, if you will. I wanted to highlight a couple other things. You touched on the smaller segments. Microsoft, for those who don't know, breaks its business up into 3 big categories. You mentioned the productivity and business processes, which was where LinkedIn now falls under. Revenues there were up 21% year over year, obviously helped significantly by LinkedIn. Intelligent Cloud overall, which is the category that Azure, the cloud business falls under. The cloud services business, that is, they do a lot of different cloud-based work that falls into several different categories. But Intelligent Cloud overall growth of about 10% year over year, and at $7.43 billion total revenues in the quarter, it outpaced our consensus estimate of $7.32 billion. And I also wanted to say more personal computing continuing to slump a bit, down to $8.82 billion. And to me, this is an interesting story because as productivity and business processes continues to grow and more personal computing continues to slump, more personal computing is at risk of being de-seated as the top grossing unit of the company overall, with productivity and business processes really kind of approaching that very closely with total revenues at $8.45 billion. As you mentioned, that's kind of breathing down more personal computing's the next. So
Yeah. Microsoft said Surface revenue fell 2%, basically because they sold fewer units, but a factor that was offset by the introduction of a, quote, higher mix of premium devices. So I don't know if you remember Microsoft introducing like those really, really nice Surface laptops. So we'll see if that has any effect in this current quarter and in Microsoft's next earning release in their fourth quarter.
Yeah. Overall, underscoring the fact that it's all about the cloud.
All about the cloud
in tech right
now. Really all about, and then kind of foreshadowing that, all about mobile. Mobile, cloud, not necessarily a huge, gorgeous laptop.
Yeah, definitely. So yeah, I think that just about does it for Microsoft, just about does it for us this week. As a reminder, guys, if you feel that we missed anything or if you'd like us to cover a different story next week, feel free to shoot us an email at podcast@zax.com. We'd love to hear from you. You can also check out all of our other exclusive audio content at zax.com/podcast. We actually just recently launched a new show that you can check out. And please remember to subscribe and leave us a rating on Apple Podcasts. Thanks again for joining us, and we will see you next time on the Zax Friday Finish Line.